Trading is not a game of 50-50. It's a game of probabilities. You can be wrong more often than you're right and still be profitable. The secret is not what you buy. The secret is how you manage risk. There is no single rule that fits everyone. But there is a very important starting point: limiting your risk per trade. A common approach for beginners: 1 to 2% of your capital per trade. If you have a $1,000 account, your potential loss on one trade is around $10 to $20. Why this matters? It gives you room to learn, reduces emotional pressure, protects you from early mistakes. This is not a strict rule for life. It's a starting point to help you survive while you grow. With this approach, even multiple losses in a row won't destroy your account. You buy time to get used to the market and develop real experience. Another important concept: risk to reward. This defines how much you risk versus how much you aim to gain. A healthy starting idea: try to earn more than you risk. For example, risk $10, aim for $20 to $30. This way, even if you're not right all the time, you can still be profitable over time. This is not about perfection. It's about balance. Now the practical part. How do you calculate your position size? Most beginners guess. Professionals calculate. A simple logic: risk amount divided by distance to stop loss equals position size. This means your size is determined by your risk, not by how much you want to earn, how confident you feel. Risk defines the trade. Stop loss is not failure. It's structure. It defines where your idea is no longer valid. For beginners, this is especially important. It prevents large losses, removes emotional decisions, builds discipline. Without a stop loss, you are exposed to unlimited risk, and that's where most beginners get into trouble. These rules are not about restricting you. They are about helping you learn safely. Limiting risk reduces the cost of mistakes, gives time to understand the market, and builds consistency. This is how you get a feel for trading. Now you understand how to protect your capital, manage risk, and stay in the game. In the final video of this playlist, we'll put it all together.